Welcome to the part 3 of our advanced costing method. Now, in the advanced costing method, we went through to learn activity-based costing in the very part 1 of the video, which we call ABC, of course, and I used a second video to do a part 2. So basically, this is like a part 2 of the advanced costing method, but when we did ABC, there were 2 videos there. So this will be basically like a part 2 of the advanced costing method. Now, in part 2 of the advanced costing method, we are going to look at throughput accounting. Then in part 3, we'll be looking at target costing. And in the last part 4, we will be looking at life cycle costing. All right, so we've already gone through ABC account costing, which I used 2 videos to actually carry that on. But we are now focusing on throughput accounting. So this is actually a part 2 of the advanced costing method. So throughput accounting. Now, what is throughput accounting? Throughput accounting is just an accounting system or an accounting method that the accountants adopt, all right, in terms of scarcity. So it's just an accounting system that is used by accountants or cost accountants when there are scarcity of resources. So accountants adopt these ones basically because there is scarce resources. Resources are not always available. And because resources are not always available and we are looking at a profit organization that wants to make profit, then we adopt this accounting system to optimize revenue or profit. So the purpose is to optimize profit. All right. So in this case, we are talking about something related to your contribution. So we are looking at the accounting system that is adapted by an accountant to optimize profit, even though there are scarcity of resources. Now, at the back of throughput accounting are 2 main concepts that you need to get. So we are looking at what we call total quality management. Total quality management. Why total quality management? Because we are trying to find out that the entity, so here we are not saying the entity is stopping production because there are scarcity of resources. We are basically saying that the entity is going to operate continually. All right, so there is continuous production. All right, Yet in this continuous production that is happening, we want to make sure that scarce resources are used efficiently and effectively. So that is why we are talking about quality. So we are talking about your ability to efficiently and sufficiently or effectively use scarce resources. All right. So that is why we need to ensure quality. Yes, the fact that there are limitations doesn't mean we should compromise on quality. It means we still need to provide quality to our supply or our customers, all right, even though there are limitations. So quality management become of a very good essence, all right. And so I'm going to delve a little deeper into quality management. But not only quality management is underpinning the concept of throughput, but there is also what we call just-in-time concept. Just-in-time, JIT concept. While this one can be the TQM. All right. Why just-in-time? Because the resources are scarce. And because you see, just-in-time principles of inventory management says that we produce what is required for the customer, exactly what is required for a customer. So in just in time, we don't keep inventory. There is no inventory in the store. No, there is no inventory in stock. We don't keep inventory. We don't produce to put into the store so that when customers wants to buy it, then we go and pull it out of the store and give to the customer. No. In just in time, we produce exactly what the customer wants. And those of you who have watched my financial management videos, I've explained just in time and time again, where I say that that is the way people do on Instagram. They post item as if they are selling the item, they have it in store, but they don't have it in store. Now, when you place the order, they will tell you that they will bring it to you in 2 days' time or a day time. Then quickly, they will go and place the order, get the product, and bring it to you. So the things are not in their stock. All right. They take pictures of it and they post it. I remember a friend of mine posted my car on his WhatsApp status that he is selling. He didn't know that I'm the owner of the car. So he was just passing in front of my house, saw the car. At the time, it was a cruise, Chevrolet Cruise. And he took a picture of it. I watched the car, parked it outside the house. He came passing by, took a picture of it, started posting. Then I saw on his status that, this is my car. How come you are selling my car? It's just because I put for sale behind it. Have you seen that? And so you see, he doesn't have the car, but he has posted that he's selling the car. Now, when you place the order, it will quickly come to me. So it's not like he has the cars in a garage. No, he doesn't. So there is nothing like inventory. There is also nothing like work in progress. We are not producing in wait, but immediately you place the order, we will come and give it to you. So that is what a just-in-time system operates. So it's like praying to God that you have a car, you want a car, but you don't have driving license. So just when you get your driving license, then God provides you a car. That is what we call just-in-time. Those of you who are lovers of Mensa Otabel, he has a sermon called Just in Time. All right, so basically that is that. But indeed, even though we don't keep the inventory, there is continuous production. All right, there is continuous production. And the continuous production is coming from the fact that we need to efficiently and effectively use scarce resources to produce the thing just in time for the customers. And so when you look at quality management, total quality management, we are going to separate it small and talk about quality. What is quality? What is quality? Now, we need to understand what quality is, and then we will look at the whole thing of quality management, all right? The whole concept of quality management that we are talking about. Now, when we talk of quality, we are talking about the degree to which a product, all right, or a service meets a specific specification, or meet the standards. All right. So a required standard. So we are talking about the fact that product, all right, the degree to which they meet required standards. My pen is a little bit slow. So to which a product or service meets predetermined or required standard. All right. All right. So when we say quality, that is what we mean. So why is this important? This is important because every customer wants quality. So the essence is to meet customers' expectation. Customers' expectation. Because every customer wants quality. You wanted quality. That is why you are watching this video, because here we give you the highest quality of tuition. All right, so that is that. And so in every entity, to make sure they have this level of quality to meet customer expectation, you will see that they have inside their entity what we call quality control. And this is something we learned in audit. Serious thing when it comes to audit. So we want to ensure quality control. Quality control. Don't forget, the essence of all these things about total quality management is to ensure efficient and effective use of resources. All right. So as we continue to operate in continuity of production, we want to ensure quality. So basically, that is what that thing is about. So you see, each entity, because of that, has set up a quality control department. All right. Sometimes we call them the audit department, just to make sure that things are done according to the predetermined standards of the entity. So you see that in each of the entities, there is a quality control that involves monitoring of staff. So they are monitoring. So they are monitoring processes, they are monitoring the product, and the essence of that monitoring is just to make sure that fraud is detected, or anything that is not in tangent with specification is actually detected. All right. Sometimes even prior to detection, there is prevention. And once these things are detected and prevented, or not prevented but detected, then it means that they will take corrective action. So they do corrections, or in the name of trying to get quality. All right, or in the name of trying to get quality. So you see that not only do we do monitoring, people inspect, and these are things that you see auditors do a lot. They review, all right, all the various aspects of production. Sometimes they go to the extent of even testing the thing to see before, if it is a product, they will test it before it goes out. All right. So basically, that is that. So when you look at quality control system, it means basically simply means that you establish some standards. So you are looking at the establishment of standards of quality. Standards of quality. And you are making sure to prevent anything that will stop that quality, all right, measurement that you are looking at. All right. So basically, that is that. So at the end of the day, because of the word control, and you've started watching this video for a while, whenever you see control, it means that you are going to make performance evaluations. What do I mean by that? You are going to compare your standard with what is actually happening, all right, so that at the end of the day, you check deviations and make corrections. So basically, that is what quality control is about. All right. So that is that. But as part of the things you need to know before we get to the whole concept of throughput calculations, that things, you need to be able to measure this quality. Because when you set the standards, it's not just about that. You need to be able to measure the quality. So what do we mean by that? Because we've spoken about dealing with performance evaluation, and you need to measure the quality, because if you are not able to measure it, how do you then know that quality is obtained? All right, so when we talk about measuring quality, we are just talking about you doing an assessment. All right, so you are assessing how the thing meets the specification. So it's just an assessment of the standard. How does the things that have been done meet the standard? And so how do we go about measuring it? What are the things that we do? You have to put up some performance matrix. My pen is misbehaving today. You need to get some performance metrics. All right. Performance metrics that are going to be used to measure. So the standard. So you have something like reliability. Are your products reliable? Is it durable? So you test these things. All right. Durability. All right. These are very good measures that you can use to test. Sometimes too, you need the customer's feedback. Because even if you want to check durability, it is given by the customer's feedback. All right. So that is that. That is that. Sometimes too, you have to check or do what we call a process matrix. And you can even add what we call conformatory or conformance matrix, just to see that things conform to the laid down concept that you have. As Africans, these things sometimes look very difficult for us. But if you go to the western part of the world, you see that even when you saved life, it must be that you saved life using the standards that were already established. All right, so that is that. So you see, all these things come with cost. All right, because if you want to prevent some things from happening, you have to hire a monitor or an internal control person. So it comes with the cost. So these things, what you see here, you have to bear some cost to do it. So there's something called prevention cost, the cost that you incur to see to it that things are actually done in adherence. All right. You have also performance evaluation that we are talking about. So it means that you have to also do appraiser, and you incur some appraisal costs, because when people do well, you have to pay them. All right. So that is that. Now, if you don't take care to do your internal things well, you will incur internal costs. Cost arriving from all the costs that you incur before delivery. So you are likely to also incur internal cost. And there is also external cost. After you have delivered the thing, if you don't ensure quality is adhered to and the thing goes out, you see that it can go in the long way to affect your revenue. All right. And these are all external costs. All right. That will come against the entity. All right. So these are the things. So when we talk about total quality management in throughput accounting, all that we are saying is that there has to be a form of quality, all right, inside an entity's actions. You must adhere to quality. You must embrace quality. And it is a continuous production process. So as you continue to produce, you will see that things must be done in the right step so that you don't lose customers out of it. All right. So basically, that is that. Now you will see clearly that the key principles of what we are talking about in total quality management is that it focuses on the customer, because at the end of the day, it's the customer that you are trying to please. So it focuses on the customer. So let's say you can say customer focused. All right. It's a key principle of total quality management. You are not looking at yourself. but it is customer focused. And for you to achieve this thing, then it means you need leadership. So leadership involvement is very important. So leadership commitment is needed to actually achieve this thing. Okay, because when you need anything to exude quality, then it means it must happen. So it's like running a church. If you want to do a quality church service, then it means that your focus should be on your members. Leadership must have the commitment. Some people complain about sound. The leaders are not buying this, especially in my church. It has been always an issue. All right. But not only that, we need everybody's involvement. So employee involvement is needed. So it means that we need to involve the church members, right? All right. So that is that. So, and you need to ensure that you look for areas that you are improving. So you need to ensure continuous improvement all the time, all the time. Like my Liverpool coach will say, we can do better. So continuous improvement. All right. And everything that you are doing should be based on data. So you need data driven decisions to be made. All right. And bring people on board and integrate them. So you have to just integrate all your systems. All right. When you do that, as you see that your processes have improved. All right. These are benefits. You get improved processes. Customer is satisfied. Reduction and losses are cut down. All right. So that is that. Of course, the challenges you face is that people are resistant to change, and so they will possibly try and fight it off. So that is the resistance that you are trying to you have to try and deal with. All right. So basically, that is that. Okay. So that is what you see. So you in throughput accounting, we want to ensure customer satisfaction. With our continuous production, we want to ensure quality. All right. So we want to ensure quality. It's very, very important. All right. Let's turn our attention to the just in time. So we are ensuring quality. At the same time, we want to produce to meet customer specification without keeping stock all the time. So in throughput, you can't have excesses. Take note of that. It is not possible to have excesses. You can't have excesses. So you produce as to meet the customer's needs. So you are doing a continuous production, but the focus is on the customer's demand. You can't produce more than you ought to. We won't keep inventory and there will be no work in progress. One thing you understand is that because of this concept, you will see that throughput accounting is priority based. So we are talking about planned priority based production. All right. We prioritize. We prioritize which needs must ought to be satisfied at each particular point in time in an order of priority. That is what we are doing. And don't forget that the whole concept of throughput is also because there is scarce resources. And whenever there is scarcity, one must prioritize. All right. So take note of that. Whenever there is scarcity, because time is a scarce resource, we don't have it all the time. That is why we will have to plan our time. Your exams is fast approaching, you need to plan your time. All right. So basically, that is that. All right. So let's look at this simple example and let's use that to expound on some terminologies of throughput accounting. I have a friend, his name is Hayford. He's a tailor. You see, he doesn't want to call himself a tailor, but he's a tailor. His tailoring is called Hayes Apparel. So let's look at Hayes Apparel Limited. All right. So let's say Hayes Apparel Limited sews dresses. Okay, so let's say he sews dresses. And let's say that he has two departments in his tailoring shop. And the two departments, we have those people who will be cutting the cloth and those people who will be stitching it. Or let's say sewing it. All right. Now, let's say the time to sew a dress, time per dress. In the cutting, when they are cutting, they will take, let's say, 2 hours. And when they are sewing, let's say they use 4 hours. Meaning that it is close to sewing one shirt or one dress a day. All right. And let's say his machine that he runs, machine, so has the capacity, the maximum capacity of his tailoring machine is such that it can operate 1,002 hours per month. All right. And let's say snitching for cutting 1,002 hours a month, snitching, let's say 1,000 hours per month. Now, I have two questions for you. My first question is that, question one, what is the maximum number of dresses Hayford can make in a month? All right. So what is the maximum you think he can make? All right. If I want to know the maximum I think he can make, if a dress takes 2 hours to cut, 4 hours to snitch, and his machine is 1,002 hours for cutting, or the human being takes 1,002 hours for cutting, and the machine takes 1,000 hours a month for stitching it, then he can actually produce a dress by looking at, I have 1,002 hours out of 2 hours. That means that he can actually cut 600 cloths. 600 cloths. Units. So let me call it, let's say, units. But with this one, that would be like he can only stitch 250 units, right? That is that. So that is the first question we've tried to answer. But I have another question. My next question is that, how many dresses? So this one was the maximum number of dresses we are looking at in a month, all right, in this. Now, if I want to know, I want to produce for my next month, all right, so, and I want to know the number of, let's say, dresses Hayford can produce. I want to make that decision. The question is that, will it be 600 dresses or 250 dresses, given his machine capacity? So if I ask you that, oh, Hayford, how many can you produce? And that is what they don't do. That is why they disappoint customers. They flout on quality. So how many can you produce? That's my question too. So how many to produce next month? So will Hayford tell me that he can produce 600 units, or he can tell me that he can produce 250 units? Listen, he will have to need 1,002 to cut, hours to cut. And when he's able to do that, he can do 600 units. But when you finish cutting, it has to go to the next stage, which is 250 he can do. So if you look at it carefully, Hayford cannot tell me that he can produce 600 when out of the 600, he can only stitch 250. And that is what they do. So they will tell you that they will do 600. But when they do the 600, they can only go and stitch 250 or so 250. That means that there will be a balance of 350
of the material still in stock. So they will postpone, come tomorrow, come next 2 weeks, come this, come that, come this, come that. That is what, and these things does not meet quality. So do you now get the understanding? And that is why what the things we learn here is very, very important, not just accountant, but it's very, very important in other phases of life. All right. So whatever you do, you need to put your knowledge to practice. So what Hayford can actually produce is 250. That is what he can do. So it means that he needs to communicate 250 so that he doesn't keep 350. Do you remember in throughput accounting, there isn't a work in progress and there shouldn't be inventory in store? So given his capacity, what he can do is only 250. So this one is a limitation. You see, the capacity here is a limitation. All right, that is it. It is a limitation. It is not allowing him to be able to produce the 600 he could have done to probably earn more. And that is the first concept that we want to establish. The first thing, or the first key thing, is what we call bottleneck. Now, that bottleneck is the limiting factor. We call it a bottleneck. It's like something is on you, you can't actually turn. So a bottleneck, which is the limiting factor. Limiting factor. Now, this one is the one with the lowest capacity. Capacity. It makes your production slow. It makes production the slowest. What gives you the slowest production? Or by means, what we are saying is that it will take you a long time to complete something. To complete something. All right. So these are what we are talking about. This is what we call a bottleneck activity. All right. So take note of that. That is what you need to understand. So the first key thing you need to understand in throughput accounting is what we call the bottleneck. That's what we call bottleneck. All right. So you understand that you need to identify bottleneck, right? So bottleneck. Bottleneck or limiting factor. Resource. All right. This is very, very important. This is very, very important. All right. From the just-in-time principle, what you have seen, the terminology that you have seen is the bottleneck resources. So it is something you need to do, and we will talk about the steps in dealing with throughput very soon. So you need to identify the bottleneck activity. All right. So, and that is coming from the concept of just-in-time. And so because for throughput, there I've explained to you, you need to go through some conceptualization. So we have basically, I'm going to deal with three broad concepts, and one of them is the just-in-time we have just talked about. And that is from which we can have our bottleneck explained. So one is the just-in-time. Remember, from the just-in-time, we realize that we need to prioritize production. So because of what? Scarce resources. We said that there should be no inventory in store. So we need to identify the bottleneck and deal in accordance with the bottleneck. There shouldn't be any work in progress. Today, my pen is dancing a lot. All right. So take note of that. Then number two, we are going to talk about the concept of cost. The concept of cost and throughput return. Throughput return. Remember, when I started introducing to you, I said that here, from when we started, I told you that we are making sure that even in scarcity, we can actually make profit. You remember? So this is our return. Can actually make some return. All right. So we need to understand throughput return. Now, one assumption that you need to get clear is that in throughput return, the variable cost is only direct material. Take note of that. Variable cost is only materials. It's only materials. Because that is what is going to be based on the customer specification, the raw materials that we are going to actually use. However, all other things apart from materials are fixed. Take note of that. All other costs are fixed. All other costs are fixed. All other costs, including labor, all other costs are fixed. So by this, we mean that labor cost is fixed cost. Is fixed cost. And so therefore, if I want my throughput return, or let's say throughput contribution, what do you think is going to be? You remember the formula for contribution, right? It is going to be my selling price minus my material cost. That's all. So contribution is equal to what? Selling price minus material cost. And that is how I will get my contribution. So the next thing that you derive from here is the computation of your throughput return. Throughput return. And in doing so, we have explained to you that fixed costs are any other thing apart from what? Material. Take note of that. Very, very, very important. Very important. Now, these fixed costs, sometimes the examiner refers to it as factory cost. So be careful. It's the same thing. Factory cost. All right. So understand that. So that is that. So since you know throughput return, sometimes you can be asked to find contribution per throughput return, and we will get there. All right. And all these things I explained to you. So please understand. Then the last concept that we want to talk about is the concept of profitability. Concept of profitability. Understand that we are looking at this in terms of a profit-making organization who wants to make profit in terms of scarcity. All right, so that's very, very important. So here we say that making money means you are maximizing your throughput. So maximizing money, maximizing throughput is equal to making money. Making money. And so therefore, ensure that you maximize throughput by prioritizing. Prioritizing. All right. So take note of that, because this is what we are going to use to deal with the mathematical analysis. So this is that, and everything is set. So now you get the key principles under throughput. All right. What we now need to do is to pick up a question and go through. So I'm going to end this section with the steps of dealing with throughput. Then in the next section, you're going to solve maybe 3 questions in a row. Right. Okay. So now, what are the steps you go through to handle any throughput question. So steps. So steps to maximize profit. Using throughput count. Then we will be looking at the throughput ratio, all right? We'll be looking at the throughput ratio. All right, so what are the steps? The step number 1 is to identify your bottleneck activity. All right, sometimes it is given in the question, sometimes it is not. So you have to identify that. Step 2, once you've been able to identify your bottleneck, calculate your throughput return. You've seen the throughput return. Calculate throughput return per unit. Throughput return per unit of each product. Because you may have multi-product. Now, when you are done, you have to calculate throughput return per bottleneck activity. So per the bottleneck. So calculate. So you can actually do that and fix these two processes together. So calculate throughput return per bottleneck. So you know your bottleneck. So you calculate throughput return per the bottleneck. You can actually combine these things into one process and call it process 2. But process 4 is to rank it. Remember prioritizing? So prioritize. So you see that what I'm doing here is the same thing that I spoke about. All right. So this concept, just in time, bringing out the bottleneck. All right. Then the concept of throughput return, making you to calculate the contribution. Then the profitability, bringing out the concept of prioritizing. All right. So that is that. Prioritizing by ranking. So you rank it, all right. In fact, the higher the better. So if the throughput return, you pick first which one is higher, all right, then you draw it down even to the lowest. Then allocate the bottleneck resource to each product that have been ranked. Allocate bottleneck resource. So this is what you do. Bottleneck resource. In accordance with the ranking, all right? So that is that per ranking. Then the last step, that is if the questions requires you to calculate the optimum production, all right? So optimum profit, that is coming from the concept of profitability, remember? So you do your optimization production or so optimization production plan to come up with your profit. So here to know your profit. All right, so these are the 5 steps that you need to go through. All right, it's very, very important. And because of that, you have to do your, for you to help you do your ranking and prioritization, you have to do your throughput accounting ratio. Very, very important. Throughput accounting ratio. I don't know why my pen is behaving like that. And the throughput accounting ratio, which we call the TPAR, is given by throughput return per bottleneck hour. So throughput return, you remember throughput return? Throughput return, which you have to get from the selling price minus variable cost. Here, variable cost meaning what? The material cost. Don't forget that, all right? Per bottleneck hour. That is in terms of the capacity. All divided by factory cost per bottleneck. Factory cost per the bottleneck as well. Now, watch this. Do you remember what we talked about as our factory cost? It is any other cost apart from material cost. Any other factory cost aside material cost, which means it includes your labor and your production overheads. All right, so take note of that. Take note of that. So this is the formula, but you see, the throughput return per hour or per bottleneck hour is the throughput return per unit. So this is what we're going to do. We're going to fish it out. My screen. Okay, so let's work it like this. We're going to fish it out because we are talking about throughput return per bottleneck hour. All right. Now, understand that given this, we are trying to say that the throughput ratio of a product should be greater than 1, all right? For us to actually optimize something, it should be greater than 1 because this is a return, okay, and this is a cost. So what we are saying is that the throughput accounting ratio is of a product, or of a product should be more than 1 for it to be made acceptable or for it to be treated as profitable. So that is what we mean. So for this throughput accounting ratio, we are trying to say that it should be greater than 1. All right. So basically that is that, so that we can actually say that the product is profitable. Concept of profitability, because this is profit, this is return, contribution, and this is cost, factory cost. So it means the gross profit or the contribution should be greater than 1 for us to deem it profitable. So that is that. Okay. But another thing you should also understand is that when we look at this ratio, you will see that we will have to deal with the top one and have to deal with the down one. So how do we obtain throughput return per hour then? So let's calculate throughput return per factory hour. Then we will do what we call factory cost per hour. All right, so let's say throughput return per factory hour. and that throughput return per factory hour will be given by my throughput return per unit throughput return, sorry, so there must be return. Wow, this thing keeps freezing. So we are looking at throughput return, and you can find throughput return, right, per unit of the bottleneck all over the number of hours per unit in the bottleneck. So please, we have our focus is on the bottleneck, number of hours per unit in the bottleneck. That gives me my throughput return. All right, per factory hour. Then lastly, I need to know my factory cost per hour. Per hour. And don't forget, these are all in relation to the bottleneck, because throughput is all about bottleneck. So let's get this one, which is also obtained by the total factory cost divided by the total hours available in the bottleneck. Total hours available in the bottleneck. So basically, that is that. All right. So take note of that. Take note of that. So all you need to understand is that this factory cost too may be given in the exams as operating expenses. Operating expenses. So take note of that. So if the examiner is trying to trick you, then you have an idea how this is going to be. So this section has introduced you to everything under throughput, the basic concept you need to understand. And I hope you have made your notes. All right. You have actually gone through everything, made your notes down. All right. Because in the next video, we are going to focus on solving questions. We are going to solve basically like 3 questions to help you understand the whole concept of throughput. I think my internet is today very slow, so it is giving some breaks in my write-up and my video that is showing up for you to see my face. So now get ready. Let's get into the next section and let's solve the questions. Are you ready? So continue to be in expectation for the next session, and don't forget to subscribe the video and also share. And I would like you to give me a comment after watching this. All right. So see you in the next session, and bye-bye for now. All right.